Hello everyone, welcome back to All Financial Discussion channel. For this video, I like to kickstart the discussion on the investment on stock. Before I go in depth onto the discussion on the investment onto stock, let me quickly explain the key difference between index fund and also ETF, which actually stands for exchange trade fund. So basically from this video, you will be able to see both the advantages and also disadvantages of index fund and also ETF. And basically from here, you will be able to determine whether which one actually will suit you better. For me personally, I think ETF actually suit me better. So therefore, on my next video, I will discuss S&P 500 ETF based on these three companies, BOO, CSPX, and also SPY. And again, from that particular video, I'm going to compare the advantages and disadvantages. And again, from there, you will be able to identify which one actually work for you. Personally, again, seems like CSPX is more suitable to me since I'm actually resident in Singapore. Before I continue, I'd like to urge you guys to help me by like this video. Please also encourage me by subscribing to this channel and turn on your notification bell. Once again, thank you so much for strong support. Let me quickly explain why invest in index fund or ETF will be very attractive for someone new in investment. Firstly, if you invest in index fund or ETF, you probably will have the lowest risk. So this is ideal. Being new, if you can reduce your risk as much as possible, this will be to your advantage. And probably also, beside lowest risk, you also have the lowest cost. So therefore, this is actually the fundamental for anybody that is new in investment to invest in index fund or ETF. Next, when you actually invest in index fund or ETF, it almost like a passive management because you don't actually need to do a lot of work. In fact, for example, if you invest in index fund or ETF, such as S&P 500, someone actually will help you to identify the top 500 US company and you don't need to do anything. So therefore, because of this, you actually do not need to have any skill set. So what you need to do is basically dollars cost average. So I will explain this dollar cost average strategized move in my next few series of discussion. Next, as I mentioned on S&P 500, basically S&P 500 allow us to be diversified. Because instead of one stock, S&P 500 actually allow us to expose to many stocks, like 500 US stock. So with this, you actually reduce the risk as much as possible. S&P 500 also will be transparent. So basically all the transaction you can actually view at the internet. Last but not least, S&P in fact will so-called will be having this attractive of having consistent performance. In fact, S&P 500 is actually endorsed by the guru Warren Buffett. Why? Because historically, many index funds, they actually outperform those active managed funds over the long term. Which means that you plan to invest at the long term. So if you invest in index fund, the chances for it to be outperform that those so-called you manage to pick up whatever one or two funds that you actually want to invest, they have a strong track record that they will be able to do better. So basically from here, you can see that why invest in index fund or ETF will be very attractive for someone new in investment. Next, let me highlight the similarity between index fund and ETF. So for index fund or ETF, basically the key thing what they want to do is they actually design to track the performance of a specific financial market index. For example, I have introduced S&P 500 and also NASDAQ 100 or Dow Jones Industrial Average. So instead of relying on active management, which means that you need to pick up what stock that you actually want to buy. Okay, so these index funds actually passively replicate the holding of their benchmark index. Okay, so they have their so-called trade secret, okay, how to select the top 500 US company. You don't worry, for example, for this S&P 500. So basically, this is why, okay, it is so attractive to invest in index fund and ETF. Okay, so there's a saying, okay, don't put all your eggs in one basket. Okay, so you probably have heard this advice in many different contexts, but when it comes to investment, okay, so this simple saying is actually the foundation for understand how the market can actually work best for you. For example, okay, if all your eggs are all in one basket, hence when you actually lost that particular basket, okay, this could mean financial disaster. However, okay, let's say if you have 10 baskets, okay, for example, when you actually lost one, it doesn't seem as catastrophic anymore. Okay, so basically this is the reason why invest in S&P 500. Okay, so this is what I mean here. One way to follow this advice is simply by invest in the S&P 500. So instead of putting your money into just one company or one basket, what if you could invest in top 500 of them in US? Okay, so that the failure or poor performance of a single company does not dome your entire investment. Okay, so this strategize is actually called diversification, and hence this is exactly what the S&P 500 excel at providing. Next, okay, I like to highlight the key difference between index fund and also ETF. Let's come to the first one, okay, trading and liquidity. Okay, coming to the ETF, okay, basically the price will change throughout the day. Okay, so basically you have the real life price for this ETF S&P 500, for example. Okay, so this is the key difference between ETF and index fund. As for index fund, they probably only trade only once per day. Okay, so after the market close, okay, based on this net asset value price, then you either buy or sell based on that particular price. While for ETF, okay, the price keep on changing every minute, every second. Okay, so basically this is what it means. You can bought or sold anytime during the market hours. Okay, most of the time for ETF, there is no minimum investment. Okay, you can buy as little as one share. However, for index fund, okay, typically it require a minimum investment. Okay, for example, for some fund, it actually require more than $1,000. Okay, so basically this is the key difference between index fund and ETF based on trading and liquidity. Next, based on the cost and also the fees. For ETF, okay, usually they have a lower expense ratio as compared to index fund. Okay, however, nowadays I don't see a huge difference between these two. Okay, so the gap actually narrow down. So for ETF, you may incur okay, brokerage commission. Okay, so again, this is actually quite rare now. I think this is quite important. Okay, what is actually bid-ask spread, which can affect cost. Okay, so let me explain what is bid-ask spread. Okay, for example, okay, there is a buyer, there is a seller. Okay, so basically, this bid-ask spread will be the highest price that the buyer want to buy, and also the seller, okay, the lowest price that the seller want to sell. The gap between these two actually will be called as bid ask spread. Okay, just imagine this: if you have a wonderful house and you want to sell your house at certain price, okay, so this will be your minimum price that you actually want to sell your house. However, okay, let's say if you are not able to find any buyer because the buyer are not so-called prepared to meet your price. So hence, because of this, you may have some strategize. You probably need to reduce your cost. So therefore, for this high spreading between the bid-ask spread, okay, this can actually affect the cost. Okay, so again, I will make another video to further explain this. As for index fund, okay, so basically some okay have higher expense ratio, okay, but nowadays it's actually quite affordable. Okay, so they are typically very low cost nowadays. Okay, so there won't be any trading commission. Okay, so if you bought directly from the fund provider, I think load fee nowadays is very rare. So if you incurred some load fee, okay, try to avoid them. Okay, I don't see a reason why we need to pay load fee nowadays. Next, okay, in terms of tax efficiency, okay, so I will do next video more discussion on tax efficiency for, let's say, S&P 500. Okay, so typically most of the time I would say that ETF will be more tax efficient, okay, due to in-kind creation or redemption process. Index fund, okay, so they may distribute capital gain, okay, which means that, for example, okay, when you actually sold, you gain some profit and you actually sold it. Okay, so for index fund, they will be some possibility that they will be actually taxed. Okay, so but again, these are all very tax efficient. Okay, so not so much, okay, but you may require to pay some form of tax. In terms of the investment flexibility for ETF, okay, we can use limit orders. Okay, so we can also stop loss order, short selling, and option trading. Okay, so basically, in short, ETF is better for active trader. Okay, so basically, this is what I actually looking at. Okay, I would like to do some involvement. So I won't call myself a active trader, but I like to take some action. So therefore, ETF seems to be a better one for me. As for index fund, okay, as I mentioned that you can only buy and sell at the end of the market. So basically it's based on this net asset value. Okay, so after the market end, there is a cost. So basically based on that particular cost, okay, you can either buy it or you sell it. Okay, so basically for index fund, it is much better. Okay, basically if you want to do automate investing, okay, which means that very passive investment, then you actually choose this index fund. Next, in terms of the dividend reinvestment. Okay, so for ETF, okay, dividend must be manually reinvest. Okay, so but some of the S&P 500, in fact, okay, they actually allow auto reinvest. Okay, so basically this is what he say. Okay, for index fund, most of the time they actually allow automatic dividend reinvest. Okay, so basically this is the key difference. As I mentioned that index fund is more passive, so a lot of things they actually will do it in an automatic manner. Coming to the accessibility, okay, so for ETF, okay, basically they will be available throughout any brokerage account. Okay, so as I mentioned, there won't be any minimum investment, just the share price. As for index fund, probably okay, they actually require some minimum investment, and most of the time we actually bought directly from the fund provider. Okay, so basically this is the highlight, the key difference between index fund and ETF. Let me do a quick so-called conclusion. Okay, so choose ETF. Okay, so if you want your price to be changed every so-called every day, every second, every minute, etc. So basically, you choose your ETF. So if you like lower cost, okay, again you can choose ETF. Tax efficiency also, so you can choose your ETF. And basically, you see yourself buying and selling more often. So again, choose on ETF. As I mentioned earlier on, index fund is much more passive. Okay, so basically this is what it means here. So if you prefer to do this set and forget investing, okay, which means that you put some amount of money and you forget about it, okay, you plan to leave it for long-term investment, then choose this index funding. Okay, so basically automatic investment, okay, which I have also explained, for index fund is also automate dividends reinvestment. Okay, so if you plan to invest in a large amount of money, then you actually choose to do it through index fund. So in a quick conclusion, okay, ETF are better for trader, okay, tax sensitive investor and those with small amount to invest. For index fund, okay, they are actually much more simple, okay, for long term. Basically for hands-off investor, which means that passive, so-called investor, we don't want to do anything, everything prefer to be automate, then you use this index fund. Okay, so this is my next video. Basically, this slide here shows the three so-called key type of S&P 500 ETF. So we have Vanguard, iShare, and this State Street here. So basically, on my next video, I will compare these three different, and basically, like I mentioned earlier on, based on the comparison on my next video, you will be able to determine which one actually suit you better. With this, I like to end my discussion. Please help to like and subscribe. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.